What makes a stock a great potential candidate to day trade? This stock went up 300% in just a couple of hours, while most blue chip stocks you would have to wait multiple years for that to take place. Problem is, usually when you see these 300% plays, you're late to the party. So how do we find these stocks that make these massive moves like this before they even happen? So we can take advantage of it, reap the benefits, and get incredible gains. Well, to understand how to find big gainers, we first have to understand volume. Volume is the total quantity of shares traded by traders for a specific stock. So the more buyers and sellers, the higher the volume. Volume can be a great indication if a stock is hot or not. Think of it as almost the amount of eyes watching a stock. The more people watching it, the bigger the spikes. As a day trader, you'll quickly realize price movement is your friend. That's why day traders like volume so much, because when there's a lot of volume, the price will move a lot more, giving us more opportunities for trading plays. While if you trade a stock with little to no volume, it's not going to be moving as much, resulting in fewer amounts of opportunities. Not only that, traders like volume for liquidity reasons, as if you're a buyer and you want to sell your position at a specific point, you can only sell that position if there's another buyer. It doesn't just poof out of midair. There needs to be someone else on the other side of the transaction. When there are low amounts of volume, it might be hard for you to find another buyer, resulting in it being harder for you to exit your position. So we now know the impact volume has on a stock, but what creates the actual movement of a stock? Well, there's actually a few factors. One is scarcity. I'm sure you've all heard the good old supply and demand. If there is a low supply of something and a lot of demand for it, that'll increase the price, right? So we identified that volume is the demand in a type of way. But how do we identify the supply? The answer? The float. The float is the total amount of shares available for public investors to buy and sell. Some companies like Amazon have 450 million shares out there in circulation, while other companies like some penny stocks only have a couple million shares out there. Every stock is going to be different. You can get this number by going on Yahoo Finance, searching the ticker symbol, click the statistics tab, then scroll down a bit till you see the float section. That's the amount of shares available right now. Now, if we go back to the supply and demand example, if we want the price to rise, we want high amounts of volume, which is the demand, and low amounts of supply, which is the float. So in most cases for day trading, the lower the float, the better, as the less shares out there creates more scarcity, meaning bigger price movements. When I'm day trading, I like to find stocks that have a 20 million share float or lower. Like I said before, the lower, the better. If it has anything more than 20 million, I won't day trade it, unless it's a really slow day and there aren't a lot of options out there. If you ever find a stock that has a massive amount of volume, a low float, and it's a top gainer, you will quickly see why this is a day trader's dream, because the amount of volatility from this is like nothing you have ever seen before. You will literally have single candles that make 10% move.